Welcome to the 2021 Economic Depression and Preparation channel. I'm your host, Tony. Thank you for joining me on this Wednesday edition, April 7th, 2021. Please be sure to subscribe and tell all your friends and neighbors to get the latest 100% pure, unadulterated financial news in the United States and sometimes abroad. Today, we want to talk about the two things: the economic boom that has been forecasted for later on this year by some economists, and as well as some companies. And as well, we're going to be talking about the Federal Reserve Bank, and they're kind of split on the outlook for inflation targets above 2%. As you know, Fed Chairman Jerome Powell states that he believes that he doesn't mind the U.S. economy running hot, so to speak, with inflation above 2, 3, 4, 5%, as long as the growth is continued and sustained through 2023. And so today, we're looking at MarketWatch.com. JP Morgan's chairman and advisor, Jamie Dimon, says economic boom fueled by deficit spending, and the vaccines, he says, could easily run into 2023. So now the target year is 2023. That'll be 1 year, coincidentally, before the presidential election of 2024. So Dimon, in his annual shareholder letter, sees strong growth for the world's biggest economy in the near term. That's the key word right there for him. Thanks to the U.S. government's response to the health crisis that has left many consumers flush with savings, quote unquote. While Dimon called stock market valuations quite high, he said a multi-year boom may justify current levels because markets are pricing in economic growth and the excess savings that make their way into the equity. So in other words, he's bullish on the U.S. economy's immediate future, but he sees challenges to the economy later on down the road thanks to political and societal dysfunction. And that's the key word, ladies and gentlemen: political and societal dysfunction. When people have a hard time meeting basic necessities, there comes a point where the rubber meets the road, and that political and societal dysfunction is going to spill out. So much so, not just in crime, but because of the high taxes, the high cost of living, and in a majority of the American cities become unaffordable. That is going to be the wild card in all of this growth situation, not the vaccines, not the stimulus money that's coming, not the infrastructure bill that supposedly is coming by the end of this year. The biggest chaos is going to come from political and societal dysfunction. And obviously, what is the biggest cause of that? Well, it's the gap between the rich and the poor, which has grown just astronomically, even in this pandemic. The last year, the rich have gotten richer, the poor have gotten poorer. Billionaires, trillionaires, all of that is possible because of this a whole bunch of funny money that's entered into the system. Now, he says, quote, "I have little doubt that with excess savings, new stimulus savings, huge deficit spending, more quantitative easing, a successful vaccine, and the euphoria around the end of this health crisis, the U.S. economy will likely boom into 2023. Actually, he is wrong because the U.S. economy is on its way down. It will have a fake boom this year, but next year, all bets are off. And we have forecasted that. We predicted that. And this is what's going to happen because everything that they're spending now, they're spending the last thing, the last hooray, the last bit of money. The Federal Reserve have already stated they're going to do everything they can. That basically means just print money until the currency becomes worthless. Hyperinflation will set in next year. And that's why, according to MarketWatch.com, the Fed officials are split on the outlook for inflation. So now that everybody's planning on getting out this summer, going having kumbaya moments at the beach like this, or going out on traveling in either domestically or international travel is going to take a while to come back. That's already said by the airlines and others. But people are going out now, they're gathering, they feel good, they've gotten the shot, so now they can kind of like not wear masks and go, hang out with more than 3 people or 5 people, or have a kumbaya moments at the beach or other places. Have you seen that recently in Florida, Texas, California, other states? This is euphoria around it, but that doesn't mean that the economy is back open yet fully. That does not mean that everything is perfect, as you know. And as a matter of fact, the Federal Reserve staff predicted historically low jobless rate by 2023. That's because a lot of people have given up looking for jobs. We still have 20 million people who have given up looking for jobs in America that are not counted in the official 2% unemployment rate that we have right now. So the Fed forecasted inflation would rise to 2.4% this year, but then settle down to 2.1% by 2023. Despite these changes, the Fed's median forecast was no liftoff in interest rates through 2023. My question is, we're already at zero interest rates now. What happens when the Federal Reserve has to change course this year, end of this year into next year, when they see that the 10-year bond continues to rise, when they see that the taxes increase, the corporate tax increase that Biden has is not creating no jobs that they thought it would, and will not back to full employment? What happens when they raise those rates? Well, I'll tell you what happens when they raise the interest rates. That's going to just destroy the rest of the remaining part of the U.S. economy. The Fed is buying $80 billion of treasuries and $40 billion of mortgage-backed securities to help the economy. The Fed said it will continue these purchases until there's substantial further progress, which we know was never going to be progress because it's collapsed. It's been collapsed since 2008. And reaching its low unemployment and steady inflation goals. Now, I'm going to ask you this. Guys, have you ever been in the mall or in these outdoor outlet malls or centers, and you see they have these big signs in the window saying coming soon, H&M, or coming soon, whatever store, Justice Jean Store, or shoe store, or DSW, and nothing never seems to come in and replace those things. Well, it's the same way. The Federal Reserve Bank is pumping money into this economy through stimulus and other measures, but that money is going into a black hole. It's being siphoned off the top by your officials, your leaders, and we're left with the $1,400, and we're left with just peanuts, to have kumbaya moments like this around the fire, just, left with just feeling of euphoria, but left with nothing but the shirt on our backs, literally and figuratively sometimes, for most people or some people. But the encouraging news is that the sooner they let this thing collapse, the more we can get back to more physical and tangible items that are actually worth stuff, like food, medicine, water, shelter, actually valued at its real rate and not at this hyperinflated rate. So that is the good news. The good news is that the supply chain is broken, but it hasn't completely broken yet. But if you haven't got everything that you need by the end of this year or close to the beginning of next year, then you're going to be out of luck getting those supplies, because the supply chain will break. The economy is going to experience a fake boom by all this stimulus, but after that, things are going to come a boom and a bust. You know what comes after the boom, ladies and gentlemen? A bust. And that is coming before 2023, guaranteed. It's going to be next year, beginning of next year. We're going to go, after they spent all of this money. The same thing happened in 1929. It was the Roaring 20s. After they spent all this money, and then next thing after that, things dropped. So stocks were changed little. Dow Jones Industrial Average only was down about 9 points. It's basically trading flat right now based on this news that they've shared. So, ladies and gentlemen, the best thing that we can do is to become more and more self-sufficient, less dependent upon the government to sustain us in times of trouble. We need to become more self-sufficient. And how do we do that? Well, we need to start thinking about how we're going to grow our own food, not relying on GMOs, genetically altered food that you get in the supermarkets and other places. We need to learn how to make things last longer, our clothing, our shelter, learning how to do different things that our forefathers and other people used to do, because that's going to be the bottom line. You don't want to be waiting in line, queuing in line for gas, food, water, medicine. You don't want to be waiting in those FEMA lines when they come, because it's coming for you and I in these cities, in these quarantine lines. You don't want to be waiting, because that means that you're at the mercy of someone else, and you may not be able to get what you need when you need it. And Americans, as you know, all of us are used to getting what we need when we need it. This instant gratification, it's there for us. We turn the water on, we expect water to be clean, we expect it to be there, but that may not be the case in the future, as you know, as we get deeper and deeper into this real depression that's on its way. So enjoy this. This is going to be awesome for us all, this boom, maybe the next 2 or 3 months, but all bets are off after August and September. All bets are off with the U.S. economy, and they know that. So they're going to continue to paper over it, but then things are going to go absolutely disastrous because the Federal Reserve Bank is going to be put into a position where they're going to have to raise interest rates. And I mean significantly raise this thing to keep the whole thing afloat. And that's not going to be good news for not only the stock market, but for the real economy as jobs, everything becomes depressed. And that's why we're going into a depression. Thank you very much for listening to me. I look forward to seeing you on the next video. Be blessed and stay tuned for more.